Hello everyone, welcome to Oliveboard. In this particular video, we are going to discuss about the SEBI's plan for major shift in the gold and silver ETF valuation. Okay, so SEBI is planning here a major shift in how do we value the gold and silver ETFs. So before starting the discussion, guys, I would like to tell you about a live webinar. Here you can get practical insights and 7 practical tips to crack the RBI Grade B examination. This will be shared by the one who himself has scored a AIR 1 in the RBI Grade B examination. The webinar date is on 27th July, 4 p.m. So please do register for this webinar. The agenda is 7 subjects, 7 actionable insights, and there will be a Q&A session as well. तो आपके अगर कोई भी queries हो तो आप definitely इस session के अंदर पूछ सकते हो. You can also download the free preparation kit that we are offering for RBI Grade B 2025, including 10 PDF ebooks, completely free of cost. Also download our application for getting all the updates on all the YouTube sessions and downloading the PDFs as well. Let's start with the SEBI's plan on changing the valuation criteria for gold and silver ETF. So first, I would like to tell you the objective is to bring uniformity and fair valuation. Okay, as of now there is a bit mismatch in the prices of gold and silver. Like, how do we value in case when we hold it physically, and how do we value it in case of domestic prices in the derivative market? So there is a mismatch as of now, and SEBI is trying to bring a uniformity and fair valuation as well. Okay, so this is definitely for the exchange traded fund. So before moving ahead, I would like to tell you what exchange traded fund is all about. Just like a mutual fund, many people are investing their money in the ETFs, exchange traded fund. So think of it as a mutual fund. You can definitely do the trading activity as well. Like, let's suppose I'm buying this particular ETF in the morning, and I can even liquidate it after 1 hour, after 2 hours, or maybe by the end of the day. That's not possible in mutual funds, right? Because the mutual fund settlements happens on the closing NAV. However, ETFs, as the name says it all, they are exchange traded fund. There is an exchange in between, and you can do the trading stuff as well, right? So this is what ETF is all about, and we do have in India gold and silver ETFs as well. So let's suppose if I put 1 lakh rupee with this particular ETF, what this ETF will do? They will physically buy gold or silver, whatever may be the fund. They will be physically buying the gold or silver, whatever may be the fund. I'll be putting 1 lakh rupees in gold or silver ETF, and that ETF needs to physically buy that gold or silver. That's the provision as of now, right? So review of valuation of physical gold and silver in case gold and silvers are held by exchange traded funds. So these exchange traded funds are holding physical gold and silvers, right, on the investor's behalf, obviously. Now, throughout the mutual fund industry, the investment made by the gold and silver ETFs, they need to be more closely aligned with that of the domestic prices. So why are we not valuing them as of now on the domestic prices? Because of SEBI regulations. If ETF is investing in any physical gold or silver, as per the SEBI rule, they need to value this particular metal based on the LBMA price. Now what is LBMA? LBMA is nothing but London Bullion Market Association. Okay, London Bullion Market Association, LBMA. Now as per SEBI regulations related to mutual funds, they need to value the gold ETF and silver ETFs based on the price prevailing in the London Bullion Market Association. Now this particular price is being stated in dollars, right? Because the most traded currency is nothing but US dollars. So London Bullion Market Association is giving the quotes in dollars as of now. Okay. So in case of a gold, you need to take the LBMA price in US dollar per troy ounce. For gold having a fineness of 995. So that's a purity. That's a purity indicator. In 1995 should be the purity indicator of gold. And if I talk about the silver, again the LBMA price only 999 wali per thousand. That's the purity indicator. Okay. The idea is you need to value it based on the LBMA price. Now because the LBMA price is stated in US dollar, let's suppose Nippon ETF, it's a ETF in India, and this particular ETF is, say for example, backed by gold or silver. Now I have invested 1 lakh rupees in this particular mutual fund, sorry, ETF. This ETF needs to physically buy the gold and silver, right? From the 1 lakh rupee that I have invested, this ETF needs to buy in gold or silver. So they will buy it at LBMA price, which is stated in the dollars. Now what is the problem? Because we are doing business in India, it needs to be converted into INR. The base price that we have taken is LBMA's dollar price. However, this particular price needs to be converted into INR, so definitely there will be forex difference. Because of this conversion, there comes a forex difference. That's the problem number one, the problem of forex difference, foreign exchange difference. Then we need to add custom duty as well, because if you are buying a gold in India, definitely you need to pay custom duty, and then you need to compare that particular price with the domestic spot price which is prevailing in the Indian market, and you need to adjust for any kind of differences. So don't you feel guys कि यहाँ पे बिना काम की कॉम्प्लिकेसी है, राइट? अरे भाई पहले तो डोमेस्टिक स्पॉट प्राइस में प्राइस अवेलेबल है गोल्ड और सिल्वर की, व्हाई आई एम नॉट डूइंग द ट्रांजैक्शन डायरेक्टली ऑन द डोमेस्टिक स्पॉट प्राइस? Rather, what I am doing here is, for ETFs they need to take the price of LBMA, then they need to convert it into INR because it's stated in dollar, so I need to convert it INR. उसकी वजह से foreign exchange difference आ गया. Then I need to add custom duty, other taxes. Then I need to compare it with the domestic prices, just to do an adjustment, so that that price becomes at par with the domestic prices. At the end of the day, don't you feel that because of this foreign difference, I am also adding custom duty, and then again I need to add a premium or adjust a discount to make it at par with domestic prices, right? That's what the current practice is all about. That's what the current practice for ETFs is all about. So physical gold and silver which is held by the ETFs, the physical gold and silver which is held by the ETF are valued as per the process that we just discussed. That's a complicated process. However, exchange traded commodity derivative, let's suppose a commodity derivative, let's suppose gold futures. Now this is a commodity derivative. Gold is a commodity and futures is a derivative. So this is a commodity derivative, right? This is being traded on NSE maybe, or MCX for example. So how do we value these kind of derivatives? On the basis of LBMA? No. LBMA is just the base price for the ETFs that are investing in physical units of physical gold, right? They need to follow the LDMA price. However, the commodity derivatives are valued as per the closing prices of the futures in the domestic commodity exchange. We are already having domestic commodity exchange on which gold futures, silver futures and derivative products of gold and silver are already trading. So don't you feel there is a need for standardization, and valuation methodology should be crystal clear in case of gold and silver across the mutual fund industry? The problem is, when ETF is buying gold or silver physically, then they need to consider the price of LBMA. However, we are already having commodity derivatives in the country. So when we are valuing the commodity derivatives, we are valuing them on the basis of domestic commodity exchange. We are valuing them on the basis of commodity derivative exchange. Let's suppose the price stated by NSE or MCX. Don't you feel there is a mismatch? Why there is a need to take this LBMA price if we are already having a domestic price, right? So what are the challenges that we are facing because of this particular problem? Too many steps for valuation. First, you need to take the LBMA price because it is in dollar. You need to convert it into INR. Then you need to add duty. Then you need to compare it with domestic price, apply the relevant adjustments. This is a complex process, and I don't understand why there is a need for this process, because we already are having domestic prices of gold and silver. Why we are not doing a transaction directly on the prices that we are having locally, right? So no uniform method is there as of now, because there are different AMC. Nippon is doing something else, ICICI ETF is doing something else, right? So different benchmarks are updating their gold and silver prices on the daily basis, or maybe alternate days or monthly. Why? Because there is, as of now, there is no such proper process in place. Nobody knows कि LBMA की price भी कौन से दिन की लेनी है, right? So there is a problem in the existing process. This creates a variation in the ETF NAVs. So Nippon EPF, this is a company. An ICICI ETF, say for example ICICI Prudential ETF, they both are using the price of your LBMA only. However, there is still a difference. Why? Because maybe Nippon is using the daily NAVs, the daily values of the LMBA, and ICICI is using maybe the monthly value, because there is no such clear-cut definition as of now. So again, the method is not at all uniform here, right? This is the second problem. Double standards in the same fund. If you are a ETF, you are buying physical gold, then you will be valued by the LBMA price. However, if you are buying a gold future, you need to take the domestic commodity price. It doesn't make any sense. What's the difference between physical gold and gold futures? The valuation criteria is basically the gold only. So why not to take domestic prices instead of the London price, right? The same asset class, however, the methods of valuations are different. That is creating a kind of complexity here. Duplication of efforts. Why we are again and again doing the same thing? Because we are taking the LBMA price, we are again converting it to INR, then we are matching it with the domestic prices. Why not to directly take the domestic prices, right? That's a problem. Here I have given an illustration as well. You don't need to read the entire illustration. This is just for understanding purpose. If you are having a free time, you can just give it a quick just have a quick glance of it. Like what they have did nothing but they have converted it first into from the USD, they have converted into INR first. Then they have accounted for the custom duty which is applicable in India. If you are importing gold, so you need to pay the custom duty. The price of gold is different in London. It is completely different in India. Why? Because we apply custom duty, taxes. Then you need to again match it with the domestic exchange price, and you need to adjust the price. Ultimately, you are taking the domestic exchange price only. So it doesn't make any sense to use the price of a LBMA. So that's what SEBI is also saying, right? That's what SEBI is also saying कि यार ये कोई मतलब नहीं है आप वहाँ की प्राइस लेके भी डोमेस्टिक से मैच कर रहे हो, रादर आप सीधा डोमेस्टिक की वैल्यू ले लो और खत्म करो, right? Now SEBI has proposed this change, particularly use spot price published by the Indian commodity exchanges directly, so you can use the spot price which is prevalent on the Indian commodity exchange instead of using the LBMA price. So they have instructed, as of now they have asked for public comments. This is just a consultation draft paper that SEBI has submitted. They have asked for comments from all the parties. Don't take LBMA price directly, take the Indian commodity exchange price, right? You can take the spot prices directly, like from MCX or maybe from NSE. These prices are already reflecting the domestic demand, supply and taxes of our economy. No need to do any kind of premium or discount adjustment. No need to convert it in INR because it is already in INR. These are the proposed changes, and SEBI has asked for consultation from you guys. You can also participate in this, okay? So the first consultation is, do you support using the domestic commodity price exchange instead of directly LBMA? So my answer is yes, definitely yes. It doesn't make any sense to take a price of the LBMA, right? We can directly take the prices prevailing in the domestic market. Second consultation is, what domestic commodity exchange? Because in India we are having MCX, we are having NCDEX as well. कौन सा benchmark लेना है, कौन सा exchange मतलब कौन सा exchange, उसके लिए भी आप कंसल्ट कर सकते हो, उसके लिए भी आप कंसल्टेशन दे सकते हो. And is the current mechanism of Indian commodity exchanges fair enough? Is it transparent enough so that we can adopt for it, right? So these things are stated in this consultation paper. सो आपको यहाँ पे पता होना चाहिए कि अभी वैल्यू कैसे करते हैं ETF, राइट, और क्या प्रपोज कर रहा है सेबी आने वाले टाइम में. इट्स जस्ट अ कंसल्टेशन पेपर, फाइनल होना बाकी है. ओके, so this is all from my end, guys. This will definitely bring more and more transparency here. This will definitely is going to bring more and more transparency, and it will ease the process as compared to the current one. Okay, so I have given you the differences as well. I have summarized each and everything for you guys in a table so that आप इसको at a glance फटाफट पढ़ सको. Okay, so this was just a short video on the current update regarding the SEBI for the ETF holdings on physical gold and silver. So thank you so much guys. मिलते हैं किसी और वीडियो में. Bye bye. Take care.